This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone, and welcome to the very last open house session for 2019. As most of you know, this is my favorite time of the month when I get to connect with all of our members, subscribers, followers, you name it. We have a good time for an action-packed hour. And I want to kick this off by wishing all of you a very Merry Christmas. And for those who are celebrating the Hanukkah holiday, I think this is the second day of that 8-day holiday. So happy Hanukkah to you and your families. And I want to do something a little bit different today. I am going to go over the general markets, and then I'm going to go over some of the equity oracle trades that we had in, because there's more than 3 that have come to a point where we are ready to take a profit or lightening up on that position. So this happens to be Ford. The reason I'm starting with this one is because I completely sold out of my Ford position when Ford hit this resistance high right here. And I want to show you that the volume is starting to pick up on the down ticks here, on the red candles. And we had a sell signal right there on stochastics. The CCI crossed with a sell signal there. And I'm going to give this as a freebie to all the people who are not yet subscribers. This horizontal line is a resistance point from back here on this day, right around the 26th of November. And I believe that Ford is going to pull back to that former resistance, which is now support. That's called a roll reversal support level. And my intention is to load right back up, right around, I guess it's going to be 906, 907. And the reason I want to get back into it is because if you're holding it past the record date or the announcement date, then you will receive the 15-cent dividend. And they paid out a 15-cent dividend last time. They might even offer a 16-cent dividend. I don't know, but I don't want to lose that because I'm trading Ford in a retirement account, so I want to make sure that I'm maxing out on those profits. But you can see that it's starting to pull back from resistance. We see support down here. It's pretty clear. And if all of a sudden I start to see a pivot up on the CCI, I might scale in or start to buy back some of that position that I sold out of. So that's Ford. Now let's go right through the market, starting with the diamonds. If you receive my weekly market report, you'll know that I announced my projections for this week would be a pullback. Today, first trading day of the shortened trading week, you could see this is a doji right here, and it was a gap up doji. If you look, Friday's high was 285.06. Today's low was 285.15. You see, that's 9 cents of gap. So there's a good chance that tomorrow, even though the markets close at 1 p.m., there's a good chance they might try to push that down to at least fill that gap, and then we'll see if this continues to the rest of the week. I'm going to get into why I think we'll see a pullback before we go right into the last day of a higher high. But right now, the volume is lower. The indicators are still overbought, and we have gaps below the market. So I'm going to leave this forecast in place for all of you to follow that and see whether or not the charts are correct in forecasting. Now, I'm going to RUT. This is Russell 2000. Now, this is a more significant chart, and I mentioned this last week. You can see that we have been stretching in this very long upward leg. But look what's happening to the CCI. We're seeing much lower highs while the prices are going to higher highs. That's a negative divergence. That is, and I mentioned this on the video, that is the most significant signal that you can get on the CCI, because when you see that, that's telling us that the momentum is shifting. If I zoom in a little bit more, even though we had a doji today, you can see we are a hair away from triggering a sell signal there, and that could push it right back to the moving average, which is right where my line, the end of the line is the moving average. So that's a Russell 2000. Now watch this. Spiders, right? It's S&P 500 ETF. Same thing. We saw a negative divergence in the CCI. We saw a negative divergence in stochastics. We have a red candle on the spiders, but we closed higher. We were up 49 on SPY on much, much lower volume. Who could tell me what the drop in volume means when a stock is going higher? Who wants to answer that? Let's see. I got to go to my Q&A box down there. Who wants to tell me what that means? Let's see. Well, thank you, Bert. Well, Stephen, you're close, but the drop in volume, Dave, you're close. You're very close. You're getting warmer. Dave says, well, Stephen says a reversal, and Dave says sellers are gone. Who wants to be? Sellers are leaving. There you go, Gene. It means when you see a drop in volume, especially when it's a dramatic drop in volume like this. Now, granted, it's a holiday week. Next week is going to be a holiday week. There are people taking vacation days. They're attaching it to the weekends. They're spending time with their family. So there's very few people like me and Mike and some of the others who watch the market every day and sometimes trade the market every day. But this drop in volume, you shouldn't misread that. A drop in volume is a drop in volume. If the buyers are losing some of that momentum in a thin market, you might have short sellers coming in and try to push it lower, maybe triggering some stops that are being trailed all the way up. So you have to really watch weeks like this. And the reason I'm pointing this out is because while we're seeing higher or a positive day in the SPY, what would you expect to see on the VIX? If it's inversely related, you would think the VIX would be lower, right? Well, guess what? We had a positive VIX today. The VIX had a higher low, higher high, and the CCI on the VIX is moving up. And my forecast on the VIX is that it's going to go higher. So keep your eye on the VIX. While the VIX is starting to move up, you might want to get a little bit more aggressive, maybe even a lot more aggressive with trailing your stops and protecting any of the profits. I mean, let's face it, we have, I think I saw a report that this is the longest winning streak since, I think it was 1998 or something close to that on record. So this is something that you can't assume or even expect that we're going to keep going higher. This is the perfect time to be moving some of those positions that are questionable out into cash, giving yourself some buying power, creating a war chest of cash so that if it does drop and bounces off the key support levels, you can get in at lower prices. Right, so that's the VIX. Now look at the Qs. This is the tech sector. I said we would most likely start to drop. Well, guess what? Here's the first day of the trading week again, and that candle is right on my forecast line, right on it. So what you have here is known as a half signal. I'm going to give you some technical jargon here, but watch. We have a higher low, higher low, higher low, higher low, higher low, higher low, followed by higher highs all the way down. Here we have a higher low, but we have a lower high. That's known as a half signal. Not quite a pivot point, but it's a cousin of a pivot point. So you're halfway there to a pivot point. If it was a lower low today, it would have been an official down tick or a pivot point. So we have lower volume. Stochastics are just pennies away from a cross. which is sell signal, and CCI is very, very close to a sell signal. I think tomorrow you might actually see a sell signal. Now, listen, I could be absolutely wrong, but it's not my opinion I'm giving you here. What I'm doing, and this is what I do each and every week, all I'm doing is reading the charts. The charts are giving us signs. I'm translating those signs or interpreting those signs in a way that I feel is either bullish or bearish. You could trade against that, or you can protect against that, or you could manage risk against that, whatever you want to do. The charts don't lie. You know, obviously they can't talk and they're not human beings. The charts are not going to give you an opinion on what your position should be. It's just, what do we do when the market is giving us a half signal? What do we do when the volume starts to drop? What do we do when the sell signals start showing up on oscillators? Well, I'll tell you what, when sell signals start showing up and you have cash, at least know that it's telling you don't buy it yet. You may not feel like a full-fledged sell is in order, but I think it would definitely hold you back from buying into a new high here. So that's, you know, knowing when not to buy is really half the battle there, right? So Stephen has a question here, and I do encourage questions. Do you ever buy puts to protect stock unrealized gains? Well, no. However, I will sell calls, which is similar. Like in my Ford position, what I did before selling is I sold the $9 calls and collected a big credit when I did that. I will often, though, Stephen, I will often buy long-term puts like I have in SMH, and I'll show you that in a little bit. I bought some puts in SMH, and I'll just hop to that to help you out with the question. SMH is, you know, I'm looking at the Qs here, so it's kind of related. SMH is the semiconductor ETF. I bought puts in this because I got a sell signal here, I got a sell signal here, I got a long stretch over the moving average, I got a support level down here, roll reversal. So what I did is I bought in the money puts. I did this actually a week and a half ago, about a week ago, right in here in this area. And I have an alert here. So what I'm doing, Stephen, is I am expecting a pullback. I'm not protecting any one position, but here's what position traders do. It's sort of a protective move, is if I have a long position that's exposed to the downside, I will then add a bearish position, maybe in a different stock, ETF, or index, because if the general markets, if the Qs come down, SMH will most likely come down. So I'll make money on that put. Now, why do I have an alert at 135? Because that's the roll reversal support. So if SMH pulls back and starts to bounce, I will then turn that put into a calendar spread. I'm not going to get ahead of myself for the, you know, in case there's people that don't trade options, but a calendar spread at this level will allow me to take in a big chunk of cash when I sell another put against my long put. So all that cash that I'm collecting goes towards my overall position, which helps me absorb some losses that I may be taking in some positions because the gains are offsetting those losses. So hopefully that helps you out. All right. And yes, it's more of a hedge. Exactly. You're right. I'm just checking. I just want to check because there's a couple of people. I just want to see if there's. I'm scanning the names here. Oh, welcome, Eric, Gene, former mentor students here. Welcome. Mike, there you go. All right, I see you now. All right, so I was talking to one of our students, Mike, who is an aggressive trader. Mike, I'm not going to disclose your positions and your account info, but Mike trades the E-minis. And again, this is where I'm going off on the norm. I don't normally talk about futures markets, but NQ/NQ and ES are the futures markets, and you can see that NQ is starting to roll over with the half signal. This is trading right now, right? This is This is an open market that we're looking at. If you turn this to a minute by minute chart, you'll see that this chart is clicking away. Now, this is the first time I've done this because normally I'm talking about stocks that are markets are closed. But look how you read the charts. Here's NQ. This is the Nasdaq E-minis, right? And you can see that now we have a bullish engulfing candle starting to form. Now, at the end of each minute, this will lock in and it'll go to the next minute. So if this locks in at the end of this particular minute, which is going to take place right in about 32 seconds, right? We have dojis right here. See, we have a doji that's shown as a gray area right there, and we have another gray area. Look at the CCI. See this? The CCI is showing a higher low here. And I'm doing this live, which is also being recorded. So that candle is going to close in 8 seconds. And then we'll go back to this, but look at this. In 5, 4, 3, 2, 1. That closes right now almost a bullish. Actually, it is considered a bullish engulfing pattern. And now look at the CCI start to cross over the momentum line. You see this? Now, as I do each and every, whenever I draw charts, why did I draw the end of the line right here? Because this is a resistance point that will most likely hit, okay? And you can see stochastics are going up, and I'm not going to keep you in suspense, but I'm going to look at that later to see if my target has hit. You don't have to stare at it, and you're not going to wish it up. It's trading right now. And for the crazy traders like Mike that stay up at night trading their accounts, that could be stressful, but you know, there's leverage there, and you don't have to put up a whole lot of money when you're trading the futures markets. All right, so we looked at the Qs, we looked at the SPYs, we looked at the diamonds, we looked at the Russell 2000, we looked at the VIX. Now let's do this. Right here is what my spreadsheet is, and if you have any questions, folks, type them in there. We have a good group tonight. I'm going to periodically check on that Q&A box. Now, for those who subscribe to the Equity Oracle, these are some of the most recent trades that we've done. Loop, I put out on November 15th. All right, we bought into that at 1021. Let me just type that in there. At 1021, oh, I got to go back to the daily chart here. Right, at 1021, we had a buy coming in. It's 1121, excuse me. 1121, where is that? It was right around here. Is this it? Let me see. Hold on. I get to get rid of that menu. All right, 1121 was right. Boom, right there. Okay, so we bought into Loop, and my target was this horizontal line up here. We hit the target price and then showed a bearish engulfing pattern. And today we closed with a bearish engulfing pattern. So why am I pointing that out? Because if there's any stragglers that have not yet sold out to take their profit, then you might want to pay very close attention to that bearish engulfing pattern. On November 21st, right, just about 6 days after that, we bought into MITK, right? This is MiTek. I've never lost money on MiTek trading this one. And you can see we bought into that on the 21st, and it's gone up. Now, my target was right here, but look what's happening. You're getting a wide divergence from this moving average, and these oscillators are starting to turn down. So you might want to protect those profits, or maybe sell half the position, or maybe sell all of your position. Totally up to you. Any subscribers that are in that, go right ahead and take action in your own accounts. Now, Uber, right, on the 26th, I sold, I said, I put an alert out to get out of the position because I was bearish. It's gone down. Snap was still in it, right? We bought into it at 1504, right? Again, Snap. At 1504, it's trading 1549. Now, again, I'm pointing this out because the stochastics is overbought. CCI is crossing with a sell signal. You might want to take a profit in that. I'm not going to have time to write an alert and a half day of trading tomorrow, I'm telling you right now, this is what you might want to do, is take some profits and protect that cash, right? So that's Snap. If you look at BLDP, which is Ballard Power, it's another one I have not lost money in. BLDP, it's a cheaper stock, and you can see that this is stormed up very beautifully. It's up by the gap fill point, which is where my target price was. You might want to get out of that possibly tomorrow on the half day. Even though the volume is high, you got stochastics starting to roll down, showing a shift in that momentum from going up to possibly lower. Now look at Eagle. This is the one that went out on December 18th. EAGL, right? EAGL. Oh, that's hold on. EGLE, excuse me. EGLE. There we go. Eagle Bulk Shipping. Now, this is the most recent trade alert that went out. Let me zoom in here. We bought it on this day. The alert went out when it was trading $4.25. By the end of the day, if you were lucky enough to get it when I put out the alert, you got in at $4.25, maybe you got in at $4.30, it closed higher. The first day you were already making money. Look what's happened. The stock has gone higher, and today we closed with a bullish engulfing pattern while the oscillators are still moving higher. What does that mean? Well, it has not hit my target yet. Here, the end of the line is my target. This horizontal line is resistance. Now, what I would suggest you do, as I mentioned in the PDF document on the alert, if you see the volume, you got to watch the volume. Even though this is a bullish engulfing pattern, the volume is less than half of what it was on Friday. So at this point, you have to protect those profits because you have a really good percentage of gain now. You don't want to turn a winner into a loser. All right. And for those who are not subscribers of the Equity Oracle, I have a 10-year track record where I'm averaging a percentage of accuracy of almost 84%. This year was not as great as the year before, but we still have really good gains on these, which I have not yet calculated because we're not out yet. So this will most likely be greater than 71%, probably closer to 75%. And I tell everyone, if you're using charts and your percentage of accuracy is not at least 70%, at least, then you're either reading the charts wrong or you need to go back to the drawing board and learn how to use some of the oscillators, all right? Because if you are getting a 70% accuracy rate and you're trading against your own signals, right? Then what does that mean? It means that you're going to be wrong 30% of the time, right? Follow me here. And if you're wrong 30% of the time and you're using the 1% rule to manage risk, during the 3 trades out of 10 that you lose, you're only going to lose about 3%. 1%, 1%, 1% equals 3%. And you follow those signals, just like what we're doing here when we're looking at the intraday chart of NQ, right? Now look, follow me here. This is not a trick, folks. This is what I do. I do this with the students all the time. Look, the signal came in here, right here. This is where we would have bought it, right? I drew this horizontal line right here. The end of the line is my target. This is resistance. I've hit the target, right? So if you're trading and you see it blowing through resistance, what are you going to do? You're going to trail your stop up. But as soon as you see a drop in volume here, let's count this. Let's see. I'll erase all lines here. Let me see. Let me look at my. All right, you got 10 seconds here. 10 seconds, 8 seconds, 5 seconds, 4, 3, 2. I would take a profit, maybe even reverse. 2, 1, it's going to change. Now, look at this. Again, I've never done this before. I'm shifting my whole tone on how I'm doing these live events. Look at the stochastics. It's overbought. But look at the CCI. Look at this, how it's going down before the price has actually gone down. You see how powerful this is, folks? Now, the CCI is right at a sell signal. It has to cross below that red line for it to be a sell signal. But look, the end of this line now is my target. So why did I drop it at the end of the line right there? Why? Because this high was former resistance, broken, is now going to turn to support. So if I was shorting a futures contract and I see, look at the stochastic starting to go lower. Look at the CCI, it's now crossed below the sell signal. Chances are the next signal that has not come up yet, chances are, boom, right now as it's coming up at the top of that minute, chances are it's going to start moving lower, hit my target, and then boom, I'm out, right? So you keep the target in place. If I was shorting this stock, I would be trailing my stop or putting my stop. I put a buy stop over that high, and if I get stopped out, I get stopped out, right? So that's how you trade your markets. And if you have any questions about any of these trades, this is the time to ask them. Let me go to my Q&A box here and see if there's any questions in here. All right, so now we've gone through all the markets. Let's take a look at your stocks. Start calling them out. What are the stocks that you want to look at right here? Go ahead. Who wants to be the first one? All right, let's look at Boeing. Phil Knorr, welcome. Let me see. John Wiseman is looking back to get back into Roku. Let me just see. Roku. Oh, look at this. Is this unbelievable? Look at that. Hit my target precisely. Is this unbelievable? If you're not excited, then you're not paying attention. I'm sorry. I get so pumped up about this because, some of you wait till the end of the week to get my forecast, but you could do this if you want to practice overnight. You want to practice your skills because you may be working all day or you're running a business all day. You want to practice your technical analysis skills. Put in your trading platforms /NQ or /ES, right? This is the E-minis here. This is the S&P E-minis. And you could do the same exact thing because it trades all night, right? So you could practice your skills there. All right, so John is looking to get into Roku, R-O-K-U, right? And let me go back to, let me get back to my daily chart. And let's imagine that this is clicking away 1 minute at a time. All right, 1 minute, 1 minute, 1 minute. We're at the end of the last minute, and what do we look at? Oh, that's a bullish engulfing pattern. The stochastics are crossing, the CCI is going up. I say, John, get back in. I'm the charts talking to John right now, right? John, get back in, right? There's a small gap up here. You get into Roku. Doesn't look like a big deal on the chart, but just like I was forecasting ES and NQ, that's where I would expect it to go. Fill the gap. Doesn't look like much, like I said, but that's a $5 move. And if you're trading options, that $5 could be leveraged by buying something like the stock but cheaper, or maybe doing a spread that's even cheaper than that, and trying to position yourself on that. All right. Now let's go to Phil looking at Boeing. Now I'm going to tell you something. I have a position in Boeing, Phil, and let me tell you what I did because I have to follow my own best advice. Right. I bought calls on Boeing and I sold the 345, 320 put spread. So to give you an idea, as an option trader, I want that stock to go over 345 and stay there. But on Friday, I waited to the end of the day, like I tell all of you to do. On Friday, I sold a third of my position because this was a bearish engulfing pattern that engulfed that day, Thursday, and the previous Wednesday, right? So I had to push my opinion aside, even though I thought Boeing was going to go higher, fill the gaps, and go higher up to this moving average. I had to do what I had to do. Now, do the charts tell you that there's going to be a new CEO put in place? No. Do the charts tell you that the satellite that they launched would not hook up to the space station? No. Do the charts give you any opinion whatsoever? No. It gives you a reading of price. Now, what's happened? We have a bearish engulfing pattern that was mainly on bad news, but guess what? They offset the bad news today by putting a new CEO in place, firing the old one, and they recovered the satellite in the desert. I think it was yesterday or today, and that reversed this bearish engulfing pattern. So 80% of the time, a bearish engulfing pattern will go lower, but it also means 20% of the time it won't. Do I regret that I sold a third of my position? Well, I can't say I'm happy about what happened today. Do I wish I can go back in time? Actually, if I could go back in time, I probably would have done the same thing, right? Instead of being up 15,000 today, I would have been up 45,000 because the calls that I bought were leveraged, right? So now what's happened on Boeing, right, Phil? You have a gap up here. This is where you got to be really careful because the gap was almost filled today. If tomorrow in the half day that gap completely fills, there is a chance that Boeing could pull back before going higher. Do I think it's going to go higher? Yes, I do, because I think they're going to really ramp up and try to put one of the worst years they've had, 2019, aside and start fresh with 2020. I think they will. But here's what you got to do. Follow the charts. So if you don't have a position, I would suggest that if you have any way of using the options instead of buying the stock, because if you're buying a $340 stock, you're tying up a lot of money. You might want to buy an option that is a leap. Again, I have to go through some option classes and know what a leap is, but buy something that's like the stock. So instead of spending $340 for the stock itself, you can go out to January 2021. Why is my screen taking so long there? You can buy a January 2021, buy an in the money leap, right? So this is like $26 in the money, or actually $27 in the money. Instead of spending $340 a share, spend $54.50 a share. Buy something in the middle, or try to get something a little tighter. When the markets are open, these spreads tighten up a bit, right? So that will act like the stock, but without having you tie up all that money. All right, we have David Bernstein, who's from the Atlanta Option Group online, and he's learning how to use leaps on TLT instead of buying TLT outright and tying up all that cash. See, I'm a big option trader. I would go so far to say that I am an ambassador for option trading. Can you lose money trading options? Yes, if you do what all the other people tell you to do, buy cheap options. I don't tell people to buy cheap options. I tell them to buy the expensive options and sell the cheap options, right? So you can learn how to trade them, do it right. If you're interested in my mentoring, I'll show you how. Ask any of these people. Ask Eric, who's on the line. Ask John Wiseman. Ask Gene Otto. Ask Dave Willingham. Ask these folks who students and former students if my program is worth it. I will spend the time with you and I will teach you options. Just you have to have patience and you got to be willing to put time towards it. Okay, so let's see where we go. I gotta go. I lost the next stock symbol. Okay, Eric says I recently opened Netflix Feb 300 puts. Now, Eric, expand on that, please. Tell me you opened it. Is that long to open, or did you sell puts in Netflix? Because if you sold puts in Netflix, I think I'm going to have to hop on a plane and smack you silly. I'm just kidding. Because if you sell puts when the stock is showing a bearish engulfing pattern, tell me, I'm not going to embarrass you anymore. Don't worry. Your long puts, yeah, beautiful. Beautiful. That's a good student right there. All right. So Eric sold half of his Ford, he's telling me. He bought puts in Netflix. Hopefully you bought it today on that bearish engulfing pattern. And what would I expect to see? Or how would I interpret these charts? This is where the rubber hits the road, folks. For those that don't trade options, buying a put is bearish. You make money when you buy a put and the stock goes down. Here's what I think would happen. Look, all my forecasts, this is a form of forecast on on Netflix to go up. The end of that line was my target to hit there. But let me get rid of this, all right? I'm going to remove this. I'm going to remove this, but I'm going to keep this line here because this former resistance, once broken here, is now going to turn to support. Now let's go through a trader's checklist. I'll tell you what, here's what I'm going to do. I'm not going to be able to email it out, but I'm going to put it up on the screen. Trading checklist, where'd it go? I'm going to put this up here. All right, checklist. There it is. Here we go. Ready? Get ready to do a screen capture. Here's what we're going to do. We're going to have some fun with Netflix here. Why didn't that come up? Again, it's slow, slow, slow. Did it come up? Hopefully it'll come up. Let's see. Get the trading checklist again. Let me open this up. There it is. All right, now let's see. I'm gonna scroll this up a little bit. All right, here's what I'm gonna do. On 3, if you could do a screen capture, go ahead, or you can go back and listen to the recording and capture this. On 3, do a screen grab, copy this, and I'm gonna scroll down so you can get the rest of the paper. All right, we're gonna go to type of candle, we're gonna look at the volume, we're gonna look at the 20-day moving average, we're gonna look for gaps below the market, we're gonna look at stochastics, we're gonna look at the CCI, and we're gonna see if there's any crossing going on with the momentum line, all right? Then you weigh the evidence to determine who is controlling the price of the stock, whether it be the buyers or the sellers, all right? Let's start and do this for Eric, and we'll do this with all the other stocks, right? What is the type of candle? Look at this. Look at this. It's on my checklist. Is there a bullish or bearish engulfing pattern? Bam. Yeah, there's a bearish engulfing pattern. There you go. All right. What's the volume? Is the volume going up or down as compared to the trend? Why do we track the volume? Because it measures the momentum. Oh, guess what? Stock is going up. Volume is going down. Boom. That's bearish. Weigh the evidence, right? Keep going. Let's get rid of that. We don't need that screen anymore. I'll save that. All right. Where's my checklist again? Let me bring that up to the top of the page and go here. Okay. Now, let's look at the 20-day moving average. Is there a wide divergence from the moving average above or below? Well, guess what? There's a wide divergence from the moving average. It's way above that moving average. And look, here's how we do it. We look at the divergence the way it is now, compare it to the way it was. We know that this stock does not like to stay that far above, and it certainly does not like to stay that far below before snapping back. All right, so if it's a wide divergence above the moving average, the volume is dropping, and we see a bearish engulfing pattern, already I'm ready to sell it. I don't even want to go through the rest of the checklist. That's enough evidence for me to actually make a trade. I know Eric is probably smiling like from ear to ear right now because everything I'm saying is going to cause Netflix to go down because everyone's going to be selling it tomorrow on my recommendation, right? No. All right, let's look for gaps below the market. I don't recall seeing any gaps, but there might be. Is there a gap down here? Let's see. Yeah, there is. Look, from this high, which is 305.71. Now, if the next day's low is higher than this day's high at 305.71, then there is a gap. So what's the low? 306.60. There's the gap below the market. Boom. I'm going to put a gap fill price right there. See that? So that too is bearish. Stochastics, is it overbought or oversold? Well, it's overbought and starting to hinge lower. Boom, another bearish signal. What's the CCI doing? Overbought or oversold? What is it doing? It's going down. Even while the stock today hit a higher high and showed a higher low, the CCI is going down, and if it crosses that red line tomorrow, it will generate a sell signal right there. So there's your checklist. If you take this and analyze it and commit it to memory, see, I don't need a checklist because I do this every single stock I look at. I look at all these things and I weigh the evidence, right? You could just put a check, is that bullish or bearish? Well, guess what? Every single one of these points that we mentioned, every single one would have a check mark next to the bearish indication. So if you're weighing the evidence, it's overwhelmingly bearish. Okay, so there you go, Eric. Now, Eric, I don't know when you're going to take a profit in that or if you're going to turn it into a calendar spread, but the way Netflix is, I think you do much, much better if you wait for the pullback and then sell and at the money or slightly out of the money put against that to take in a huge chunk of cash. Okay. All right. Now, Paul says, I have a very large position in this and sold it at 19 and a half 2 weeks ago. Oh, which stock was that, Paul? Let me see. Paul, you saw me 20 years ago in Boston. I think I was on stage either before or after Jim Cramer. Was that the one you were at when Jim was there? All right, I'll wait for your answer. But also, oh, PAAS. Okay, yes, you were at the E-Trade event. Ah, interesting. Boy, I tell you, I'm still kicking. I think I have at least, let me see. I think I have at least another 25 years to go. I'm 61. Yeah, I could easily see myself doing this till I'm 86. Yeah, I could see myself doing this. So I'm going to be around for a while. All right. So what did you do here? You bought, you have a large position and sold at 19 and a half. All right. So you have a very large position. So how do you sell it at 19? If you have does that mean you still have a position in this, Paul? Or you had a position, you sold some of it at 19 and a half? All right, I'm gonna wait. No, okay, you don't have a position. All right, well, you can't kick yourself if you sold it, $3 lower. Chances are, if you sold it at 19 and a half, you made money. Now, here's what you do. You wait for it to pull back to a new buy point, and you use that checklist to check off when all the signals are bullish, right? When you have a bullish engulfing pattern, when the volume is down on the way down, when there's a wide divergence below the moving average, when there's a gap above the market, when stockastics are oversold and starting to cross higher, when the CCI is oversold and starting to cross higher, that's when you get in. Now, here's what I do, all right? Because sometimes, because I trade silver, right? I get in on silver, and when I sell silver, I'll flip to another stock so that I'm not frustrated that I sold out too early. All right? Here's what I mean by that. Often, when I sell silver or buy silver, I'm either moving out or moving into Ford. So I usually cross these two. Now, notice, Ford is showing a downturn. Right now, I am in cash on all retirement money. I'm completely in cash, completely. However, I'm waiting for Ford to pull back. If I get back in Ford, collect a dividend, Ford goes up, looks overbought, I will then look at SLV and then go back into my position and try to trade it that way. So what I would suggest you do is find a stock or an index that most of the time is inversely related to your position. And I'm going back to David. Let me see. Is David still on the line with us? Let's see. I just want to check here. Is David in there? I know. Yeah, David. Okay. I'm using it as an example again, David. All right. So David, watch. David is in TLT. David, is it okay if I tell everyone what your position is? Let's see. Just say yes or no. If you'd rather I don't talk about your positions, then I won't. I'll call you Sam. All right. So David is in TLT right now, right? This is the forecast that it will most likely pull back up to this resistance or at least to the moving average. When it does that, David or Sam will take the profit and then move into a spider position. Because guess what? When TLT is starting to pivot up, SPY starts to pivot down. They're more or less inversely related. Okay, so Paul says you're using silver as a warning comparison. Yeah, that's good. That's okay. But try to find another stock that is comparable to the price that you're trading Even though silver and Ford are not exactly in price, I could just buy more Ford shares. But try to do something that you can trade out into. So if you get to cash and you look for another buy, and you're kicking yourself for selling too early, then just make your money in another stock. I'm not trying to trick myself in any way, but I try to get my head around another stock symbol so I'm still following the signals. All right, so WPM, let's take a look at that. That's what Paul gives me. WPM, is that one that you want? So here's one, look at that. Wow. Now, this is an interesting one. Now, Paul, if I go back to that checklist, I don't see a bullish engulfing pattern, but I see a long green candle there, right? Is the volume higher today? Oh, it's close. That's pretty strong volume for that. Indicators are going up. CCI just crossed yesterday with a buy signal after a bearish engulfing pattern. It reversed. So look at this one. I'm just kind of analyzing Paul's stock. Here's a stock that likes following bullish and bearish engulfing patterns. Look at this. Look at that hammer pattern, right? Boom, that's bullish. Here's a bullish engulfing pattern. It went up, very close to a bullish engulfing pattern. It went up, very close to a bearish engulfing pattern with long shadows. It went down. Here's a harami. That's bullish, just like a bullish engulfing pattern. It went up. Here is a big ring candle. I'm just going to say this is just kind of wash out, but here's a bullish engulfing pattern, and it went up, right? Now, how are we reading this? Let's go. There's no divergence really from the moving average because it started off right close to the moving average. So there's no way we can't give that a positive or negative reading. However, the big green candle on fairly good volume with the oscillators going higher tells me this stock could very well be setting up for a breakout to the upside. See? Now, here's what we're looking at. This is an ascending triangle. See? Higher lows while the highs maintain a flat line resistance. I would say that's a first close. This violated it. It traded over, but this is the first close over that moving average. So what I would suggest is that if you are long this one or thinking about getting long, then you could take a ride all the way up to around 31. And I'll leave these lines on here so we can look at them next time. But there's a good chance that this one will go from 28.5 to 30.5 or 31. Now, what you have to watch for here is as the stock starts going higher, you have to keep an eye on the volume, because if the volume starts dropping, what is that telling you? Well, go to the checklist. If the volume is dropping as the trend is going higher, that's a weakening signal or a bearish signal. All right. All right. Keep coming with the stock symbols. All right. All right. You're trading gold, streaming, and silver. Okay. Dave says he's long ORLY. Looks like it's at support, time to buy more. All right. I love this one. All right. I'm not going to tell you, Dave, to buy more. I'm going to interpret the charts, and the charts will tell you. Because when I'm not on the phone with you, the charts are going to be there to talk to you, right? Now, I would say no right now, because that checklist that just went through my head, right, that I just rehearsed with you, immediately at a glance, I went through all those things. Look, there's no divergence from the moving average, so it's not overbought and not oversold. The drop in volume is bearish. The stochastics are going lower. The CCI is still going lower, and there's a gap below the market. So I would say no, it's not time to go long. In fact, what you have to do, David, is you need to protect that, because if it closes below that low, right, and if you're long the stock, wow, that's a lot of money you're tying up. But if you're long a put, all right, I mean, along a call, I would say get out of the call if it closes below that support, and then wait to get back into a long position after the gap fills, all oscillators start to reverse, and the volume starts to drop on the way down. Remember, dropping volume on the way down tells us the sellers are exhausting themselves, right? All right. So Mike says, I'm confused if they are inversely related and you sell SLV and buy Ford. Well, they're not always. I can't say that SLV and Ford are inversely related. Let me qualify that a little bit more. If I get out of SLV because I'm seeing an overbought condition or a sell signal or whatever, and it keeps going higher, I'm not going to try to jump back into SLV. What I'll do is I'll wait for Ford to give me a buy signal. They're not always related, but a lot of times I find that when silver is overextended, for some reason, I'm close to a buy on Ford, right? So that's what I would do. I wait for a buy signal on Ford, and I'm not in both. I'm either in one or the other. I kind of cross trade those, if you will, trading both against the middle, which is my position. So hopefully that helps you out there. Yeah, Dave, that is a gap. That is no doubt a gap down here on ORLY. All right, so Stephen, welcome. Stephen says, want to buy CNC. Let's take a look at this. And that's interesting because, and this is, again, that checklist, Stephen, is going to come in really handy for you. Now, I can't see anything that's overwhelmingly impressing me to buy it. But I don't see anything that's telling me to sell it yet either, right? So if you were long it, I would say trail your stop below this low, which is the gap fill support level here. But the oscillators are still going higher. The CCI is turned up. And the reason I say I think you can find a better stock is because this resistance area is right here. It's from the highs back here, right? And if you look, again, going through the checklist, you see a small candle, right? It's not a convincing buy signal. It's a small candle. A doji and spinning tops are signs of indecision. So that would, I guess I could have put a neutral column in there. The spinning top is a neutral candle, right? The drop in volume, however, is bearish because if the stock had a higher low and a higher high from Friday, but the volume is 20 to 25% lower, that's bearish, right? There's more of a divergence above the market from that moving average than below. And there's a gap still. It looks like that gap is not filled yet. So there's still a gap way down here around 50. So you got the CCI is overbought, but still, again, hinging higher, but still categorized as overbought. And the stochastics are showing almost overbought. All right, so keep an eye on that. And maybe you might want to look for something else to buy that's a little bit more convincing. All right, Rick says, is it time to buy puts on Macy's? Well, guess what? Macy's, you should have been buying puts for the last year, right? Here's Macy's. You know, John Najarian, who's a friend of mine, he's on CNBC. We had a bunch of people in a boot camp not too long ago. John and his brother Pete. Pete showed up in Miami with us, and I was just having a conversation with Pete in front of a small group of students there. And they have a service that identifies unusual option trades. And there has been a lot of put trading going on in Macy's. Now, here's the thing, and Pete, not to throw the story or the fundamentals into this, but Pete made a very good point. I haven't been into a Macy's in I don't know how long. I don't like going to the mall, and I shop online most of the time now. But Pete said, when was the last time you were in a Macy's? He goes, Macy's is starting to look more like Target used to when they were at the worst condition for Target. And he goes, you know, they're not doing anything to compete with the online sellers. And that's true. So while I would agree, okay, with an idea of possibly buying some puts. What did I just click on here? I hope I didn't mute you out. Rick, while I would agree, I just have a really hard time shorting a $16 stock that's been basing at 15 or so. You see what I'm talking about? So here's a stock that's in more or less a descending triangle. I can go out here, but you don't have that much of a downside, reach here. And if you sold it short or bought puts at 1620, where are you expecting it to go? Well, the end of that line is 1435. So you don't have that much downside. With that said, all of the indicators are telling me to sell it, except for the wide divergence. We'll have a wide divergence from that moving average. Remember my checklist. What kind of candle we have? Small spinning top, a sign of indecision. What's the volume doing? It's dropping while the stock is going up. That's bearish. Stochastics crossed with a sell signal. CCI today crossed with a sell signal. So if you're looking to buy puts, I would put it this way. I would lean more towards buying a put than buying a call right now, right? Now, Rick, your question has helped Phil out because interestingly enough, Phil is saying Macy's, no position, thinking of buying some shares at 17 or lower. So maybe you guys should go offline and make a deal together where you just take the opposite side of each other's trade. And I'll put money on the fact that, and I can guarantee this, one of you are going to be right. Few guarantees that I give, but that'll be a guarantee. All right. Rick, ORLY. Hopefully you got my comments on that one. Okay. So Dave was looking at buying more. And I see danger signs written on that if it closes below the support level right there. All right, now, okay, yeah. Hopefully, Paul, I helped you with that question between Ford and SLV. They're not related. I just go off some. See, I could sit there and say, well, let's look at GLD. All right, now here's a high price cycle. Here's IAU. For those that are looking to spend a lot of money on GLD, go with IAU. It's a tenth of the price, right? So here's IAU. Momentum is going up, not quite a buy signal right there, but let's say that IAU goes to 14.5, right? 14.5, and I sell it, and I take my profits once the gap fills. I can go from gold to maybe SMH or buying a put. Right? So this is, for me, clearly showing a sell signal. They're not related in any way, shape, or form, right? Gold and the semiconductors are not related unless you're counting on the fact that they use gold in some of the boards that go into computers. That's the only way that I would see any relation there. But from a trading standpoint, I am a position trader. I am trying to hedge with options, but I'm a position trader trading against the middle, which is my position. My screen is gone? Uh-oh. Are you kidding? Let's see. This whole time I'm talking and my screen is gone? Oh, I am so sorry about that, folks. I wish I had seen those comments. All right, so hopefully got the screen back there. And the recording is going to be kind of messed up with that screen, but at least you'll hear my voice on that at least. All right. So with that, I am going to wrap up with 1.5 minutes left. Again, to recap, if you want to practice your technical analysis reading, go and put in /NQ, which are the E-mini futures, right? You scroll and you click on the minute chart and you trade that minute by minute, right? Look at that. Look at that. Bullish, almost bullish engulfing pattern bouncing off the support. Boom, right here. It's probably going to break out over that moving average, right? Probably going to look just something like that in the next minute or so. All right. So what we have is a good lesson on how to use a checklist. We had a good commentary, I believe, on the general markets. The only thing I have to say is that be very, very careful as you start buying on the highs, because I am expecting a pullback. I'm being very protective and defensive at this particular point in time. And while we all tend to get caught up in the hype from time to time, I think we could see a close of the year with higher highs, But for this week, I'm expecting a little bit of a pullback. Next week, right up until the very last trading day, I think we'll see a bounce. And then we'll have to manage what we call the January effect, which is generally when the small cap stocks start to get bought up in the first weeks of the brand new year. And that's going to be very interesting because, as they say, as January goes, so goes the year. So again, I want to thank everyone for joining us today. Keep your stops in place, stay in touch with the market guys, and we'll talk to you soon. So long.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.